Here are four stocks that I have my eyes on this week for potential buys. Like many of you, I try to put money to work on a weekly basis, trying to either increase my position size in old positions or try to enter into a new company. So the four companies we're going to take a closer look at today, one is a software based, one is a gaming company, and then we're also going to take a closer look at two clouding giants. So let's take a closer look at why I'm bullish in these companies right now. All right, the first company we are going to take a closer look at is Adobe. And this is right now a stock that has definitely done really, really well in the past year to date. Is up roughly 14.5%. For those that are not familiar with Adobe, this is a huge software company. They do provide, and let's just take a closer look at the slide, right? They do provide a lot of great solutions. Their main market is the Creative Cloud. So if you are some form of designer, some form of content creator, you're most likely using Adobe for your line of work. Obviously, in the business world, they do have things like their Adobe Document Cloud, which includes a lot of kind of PDF products and a lot of business solutions focused in that PDF file. Finally, they do have some other Experience Cloud, which helps with data analytics, and it's their more business oriented platform. So if you are a consumer, you probably haven't heard of Adobe Experience Cloud, or if you used it too much, because it's more of like a business to business type market. So like I mentioned, Adobe year to date is doing amazing. But if we take a closer look at the company from its 5-year high, the stock is down roughly 40.4%. So the main reason I am excited about Adobe, I do believe the creator and the content economy is still pretty strong. We continue to see big applications like YouTube, like TikTok, like Facebook, all kind of really focused and continue to bring creativity in forms of either videos, images, and I do believe Adobe is going to be a strong winner there, especially in the Creative Cloud. The other thing, though, is the artificial intelligence, this generative AI that we are seeing right now. I do believe companies need to adapt to some extent, and in my opinion, with what I'm seeing, Adobe just recently announced Firefly. They seem to be a company that management is willing to move with technology, and I think for something like this that is definitely needed. So we can see in their Creative Cloud, that's the portion I'm the most bullish. Luckily for me, we can see the company's most recent revenue of creative revenue was $2.8 billion out of the company's total revenue, I believe, of 4.7 billion. So we can see a good portion of this company's total revenue comes from the Creative Cloud segment, and obviously these other segments are a good diversification amongst it. So I really enjoy Adobe. We can see free cash flow roughly 7.3 billion, so things are looking good. Cash and short-term investments of 5.7 billion, looking good again. And if we take a closer look at total long-term debt of roughly 3.6 billion, at the end of the day, I want to say the balance sheet of Adobe is pretty strong at the moment. Next, if looking at some form of valuation for Adobe, this is a free cash flow machine. So price to free cash flow might be a great metric to look at. We can see in the past 5 years where it normally sits. It sits in that mid 30s, upper 20s. Right now sitting around 24.6. And I do believe this can continue to grow over time. Maybe not in a steady incline, but we can see, I think valuation right now is sitting pretty attractive for Adobe. So I'm liking this company a lot right now. Before we go any further, I want to thank you for watching, and I need your help to reach my goal of 30,000 subscribers by the end of the year. So if you can do me a favor, hit that subscribe button and thumbs up. Also, if you want some fantastic insight into the semiconductor industry, join my other channel, Semiconductor Investing and More, where I use my electrical engineering background to break down the semiconductor market. Finally, I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode. Now, the second company, and Adobe is one I believe I added to my portfolio only recently, two or 3 weeks ago was my first position. So I'm trying to dollar cost average into it and increase my position size. The second company I'm going to take a closer look at is in the similar boat, but this is in a whole different market. This is Nintendo. Right now it is traded over the counter as ticker NTDOY. That's the one I personally go with. I think it depends on where you are if you want to look into this company, but Nintendo, in my opinion, is looking pretty amazing. Again, if we take a closer look From its 5-year high, the stock is down roughly 40%. Year to date, the stock is also down 7%. One of the main reasons impacting is, unfortunately, the company's most recent earnings, which I believe they reported in February. They did kind of downgrade their guidance in forms of net sales and forms of or forecast of hardware sales as well. For example, they believe they were going to sell roughly 19 million units in the full year, in their fiscal year of 2023, which ends in this upcoming quarter. And they originally thought 19 million. They kind of downsized it to 18 million instead due to demand not being that strong. I do believe, unfortunately, was due to that heavy inventory correction we did see. But the Nintendo system is still pretty strong. So that's the main thing. I mean, we can see again here. Here's another kind of chart explaining Nintendo Switch and their hardware sell-through. And unfortunately, right, we can see it peaked in 2021. It saw a decrease in 2022, and it saw another decrease here in 2023, or for their fiscal year of 2023, right? They are about a year ahead. But what I think is more important to understand is, hey, they sold the hardware, but are they able to keep the users? And it does seem like that's the case. Annual playing users, even though sales have been decreasing, annual playing users continue to increase at a nice steady rate. So that's great to know. We continue to also see Nintendo, right? We can see their first party software set games. A lot of their games are first party, continue to do amazing. Some new titles that came out about a quarter ago, I believe, or 2 quarters ago, Pokemon Scarlet and Violet were some great performance there. So I do believe Nintendo has huge potential, especially for the price it's at right now. The company also did announce some new products for 2023. Some of them already came out, like Kirby, but some that are I know gamers are super excited, and I believe are going to do great are going to be the Zelda new game and the Pikmin 4 new game. Another thing that Nintendo is doing is they are expanding outside of just games and trying to grow their IP. One of the main things they did is Super Nintendo World at Universal Studios Hollywood has had his grand opening in February 17th. The other thing is we did see Super Mario Bros. Movies is premiering in the United States on April 7th. So overall, they are trying to grow that innovation with their strong IP. They also mentioned they are continuing to work on various other initiatives to expand the number of people who have access to Nintendo IP. So I'm pretty sure we're going to continue to see them expanding into other markets. And maybe a quick price to sales ratio look here at Nintendo, roughly 3.5. Taking a closer look in the past 5 years, it doesn't normally sit here. It seems above that four levels, or above 4. So right now it's looking a little bit attractive there. I do believe Nintendo is one that has huge growth opportunity. I think Nintendo is definitely a sticky business, and they have some strong IP. Now the third company, this is going to be more of a tech giants. I think October was a great time to buy a lot of these growth stocks. And I still think right now is definitely a huge time to buy growth stocks. But I do believe I did a good bulk of my buying in October, in September, in November, and all that. I think right now what I'm really trying to do is increase my position in clouding giants and the big tech. I think right now it's time for big tech to kind of grow in my portfolio. So Amazon is one that I don't have, and I keep thinking about adding. I keep doing a few videos. I've done a few videos to be bullish on Amazon. Make sure to check it out. I believe I'll post the link up here. But Amazon right now sitting at $103. We can see year to date it's up 20%. But from its 5-year high, the stock is still down roughly 43%. There are, in my opinion, numerous reasons to be bullish with Amazon. First is AWS. I think their clouding solutions is a huge winner, especially, again, if you are bullish in that generative AI or this AI market. The infrastructure is going to be a great play, and their clouding solutions are going to be a no-brainer, in my opinion. So AWS is a huge market there. Obviously, Amazon ads. I do believe the advertisement market right now is super weak, but it is one that has numerous tailwinds behind it. Amazon, with their huge real estate of ecosystem, digital real estate, right? Amazon ads, in my opinion, can continue to grow for this company. So I like Amazon a lot. Obviously, the e-commerce as well is one that's seeing a lot of headwinds right now, but I do believe the tailwinds in the long term of things can definitely make this almost a no-brainer. Almost, right? There's never a no-brainer in the market. If we take a closer look at the 4 stock, kind of continuing here with the tech giant Alphabet. Alphabet, in my opinion, is getting no love right now in any places. It's getting no love in the AI market because we are seeing how Bing might be beating it, but it's also getting no love due to their advertisement exposure. We can see from its 5-year high, the stock is still down roughly 30%. If we take a closer look, why am I bullish in Alphabet? First, like I mentioned, the advertisement market, even though it's seeing a nice amount of headwinds, in the long term of things, this is a market that I believe can continue to grow, especially with their solutions like YouTube ads and Google search. It's going to be very tricky, especially with this kind of search war that's happening right now. We don't know where exactly it's going to lead, but I do believe that Google is not going to go without a fight, and they're going to be a strong player here. YouTube ads, in my opinion, is a no-brainer as well. While they are seeing a bit of a decrease here due to numerous reasons and their exposure to YouTube Shorts, I think YouTube ads also has amazing tailwinds behind it. Finally, like I mentioned, with Amazon, Google Cloud, the clouding solution, the infrastructure solutions is a big win right now, especially with this generative AI and this AI push. I do believe we are going to see a nice amount of revenue growth coming into the clouding market in the upcoming years, and Google Cloud can definitely get some exposure there. Just a quick look at Alphabet. If you want to look at EV to EBITDA ratio, right now sitting at 14, normally sitting above that 16 value. So right now it's seeing a bit cheap. So again, I think right now, earlier on, I was looking at more heavy growth stocks. I think right now I'm looking at a great mixture of growth like Adobe, growth like Nintendo, which in my opinion have great opportunities. But I do believe right now it's also a point where a lot of these big techs like Amazon and Google might not be getting the love they deserve right now. And that's where I want to focus on increasing my portfolio size. So I hope you guys enjoyed today's episode. Take care. Have a good day and see you next time.